The realm of crypto is one that is constantly evolving and changing at a rapid pace. New technologies and innovations are being developed regularly, and as a result, the landscape of the crypto world is always shifting. Keeping up with these changes can be a daunting task, but it is also essential for anyone who wants to stay relevant in this space. Knowledge becomes a valuable resource in this context, as it can help individuals and organizations stay ahead of the curve and make informed decisions about how to navigate the complex world of crypto. Those who are able to acquire and apply this knowledge effectively will be better equipped in the dynamic and ever-changing world of crypto. Welcome to our channel, where we show you all the latest, relevant, and any information that has to do or affects the world of cryptocurrencies, all in the comfort of your very own Crypto Attik. Today, we will be looking into one of the things that helps the realm of crypto evolve: DeFi. Before anything else though, please remember that this video is not any form of financial advice, but solely our fact-based opinion that is meant to educate and inform you of the latest and most relevant information fresh from the world of cryptocurrencies. We strongly urge you to do your own research before dealing, trading, or buying any cryptocurrencies. We also encourage you to seek professional financial advice before making any investment decisions and to only invest what you can afford to lose. Lastly, we are not responsible for any losses or damages that may occur as a result of actions taken based on the information provided on our channel. Please use your discretion and invest wisely, because knowledge is your greatest asset. Invest in it first. Let's get to it. DeFi stands for Decentralized Finance and is a suite of financial services built on blockchain technology. It allows users to access financial services that are secure, transparent, and accessible 24/7 without the need for intermediaries like banks or government regulators. These DeFi applications can be used to manage assets such as cryptocurrency, loans, insurance products, derivatives, and more. The benefits of DeFi include greater accessibility in developing countries where traditional banking infrastructure may not exist, improved security by eliminating the risk of centralized hacks, lower fees due to lack of overhead costs associated with middlemen, increased efficiency through automated processes, and greater transparency due to immutable data stored on blockchains. DeFi has become an important part of the crypto community as it provides an alternative means for people around the world to access financial services without relying solely on traditional institutions. The first thing you need to know about DeFi is understanding its protocols: lending and borrowing. Lending and borrowing are integral parts of the decentralized finance ecosystem. DeFi lending protocols allow individuals to lend out their cryptocurrencies to earn interest, while borrowers can use these funds to borrow and leverage their assets without the need for intermediaries such as banks. The benefits of DeFi lending and borrowing are numerous. First, DeFi lending and borrowing are permissionless, meaning that anyone with an internet connection can participate without needing to meet traditional banking requirements or going through a credit check. This opens up access to financial services for people who may have not been able to access them previously, providing more financial inclusion. Secondly, DeFi lending and borrowing protocols are generally more transparent, secure, and cost-effective than traditional banking systems. With DeFi, there is no need for intermediaries such as banks or financial institutions, which reduces cost and the potential for errors or fraud. Thirdly, DeFi lending and borrowing allows individuals to earn higher interest rates on their assets than traditional savings accounts. This is because there are no intermediaries involved and the higher interest rates are set by the market, not by centralized institutions. DeFi lending and borrowing also benefits borrowers by providing access to capital without having to go through a centralized institution. Borrowers can use their crypto as collateral and borrow funds at a lower interest rate than traditional financial institutions, providing a cost-effective and efficient way to access capital. Decentralized exchanges, or DEXs. Decentralized exchanges are a type of exchange that operate on a decentralized platform, allowing users to trade cryptocurrencies without the need for intermediaries, such as centralized exchanges. DEXs are a crucial part of the decentralized finance ecosystem, and their benefits are numerous. DEXs offer users more control and privacy over their trades. Because DEXs are decentralized, users have custody of their own assets and can trade them without having to deposit them into centralized exchanges. This means that users do not have to trust centralized exchanges with their assets, reducing the risk of loss due to hacks or security breaches. It also provides users with more transparency and security than centralized exchanges. With DEXs, users have full control over their trades and can verify all transactions on the blockchain. This means that there is no need for users to trust a third party and that there is less risk of manipulation or fraud. DEXs are generally more accessible than centralized exchanges. Because DEXs do not require users to go through a lengthy KYC process, anyone with an internet connection can access them, providing greater financial inclusion. Derivatives and leverage. Derivatives and leverage are important tools in the decentralized finance ecosystem. These financial products allow users to manage risk and increase their potential returns. Derivatives, such as futures and options, provide users with more complex trading strategies that can help them hedge against market fluctuations or take advantage of potential price movements. Leverage, on the other hand, allows users to borrow funds to increase the amount of capital they have to invest, potentially amplifying their profits. The benefits of derivatives and leverage in DeFi include greater accessibility, lower costs, and increased transparency and security. These tools operate on a decentralized platform, reducing the need for intermediaries and providing greater access to a wider range of users. Additionally, because all the transactions are recorded on the blockchain, there is a higher level of transparency and less risk of manipulation or fraud. Derivatives and leverage are important components of the DeFi ecosystem, providing users with more options for managing risk and maximizing returns. What other things do you think DeFi could or should influence? Leave your thoughts in the comment section and let us know. Now that you have an idea on the different protocols involved in DeFi and how they impact the crypto community, you should also know the rules and risk of leveraging DeFi: arbitration, slippage, and impermanent loss. Arbitration, slippage, and impermanent loss are important concepts in DeFi that are worth understanding. Arbitration allows users to take advantage of price discrepancies across different exchanges, while slippage refers to the difference between the expected price of a trade and the actual price at which it is executed. Impermanent loss occurs when a liquidity provider's tokens holdings lose value due to changes in the market. While these concepts can have potential drawbacks, such as increased risk and potential losses, they also provide opportunities for users to maximize their profits and contribute to the overall liquidity and efficiency of the DeFi ecosystem. Liquidation. Liquidation is a process that occurs in decentralized finance when a user's collateral is automatically sold to repay a loan that they are unable to repay. While liquidation can have potential drawbacks, such as the loss of collateral and potential losses for the user, it also has important benefits. Liquidation helps to ensure the stability and integrity of DeFi platforms by minimizing the risk of defaults and reducing the potential for systemic risks. Additionally, liquidation can incentivize users to manage their risks more effectively, encouraging responsible borrowing and lending practices within the DeFi ecosystem. While liquidation can be a challenging process for users, it plays an important role in ensuring the long-term sustainability of DeFi platforms. Flash crashes and flash loans. Flash crashes and flash loans are important components of the decentralized finance ecosystem that carry both risks and benefits. A flash crash occurs when there is a sudden and dramatic drop in the price of a cryptocurrency, which can result in significant losses for traders. However, flash crashes also create opportunities for arbitrage and buying assets at lower prices. Flash loans, on the other hand, provide users with access to large amounts of liquidity without requiring any collateral, which can be beneficial for users seeking to take advantage of arbitrage opportunities or execute complex trading strategies. However, flash loans can also be used maliciously, resulting in potential losses for lenders. As the DeFi ecosystem continues to grow and evolve, flash crashes and flash loans will likely continue to be important components, and it is crucial for users to understand the risks and benefits associated with these concepts in order to make informed decisions. Finally, viewing DeFi from different perspectives is crucial in understanding its use in the world of cryptocurrency. From a technological perspective, DeFi represents a significant shift in the way that blockchain technology can be used to create a new financial system that is more open, transparent, and accessible to everyone. From a financial perspective, DeFi allows for more efficient and cost-effective financial transactions without the need for intermediaries or third-party organizations. From a social perspective, DeFi has the potential to increase financial inclusion and provide a more equitable financial system that is accessible to everyone, regardless of their location or socioeconomic status. In the world of cryptocurrency, DeFi has become an important tool for traders, investors, and users to manage their assets and participate in various financial activities such as lending, borrowing, and trading. Overall, understanding the various perspectives of DeFi is essential in recognizing its potential benefits and limitations in the world of cryptocurrency. That's all for today. Thanks for tuning in to our crypto channel. We hope you enjoyed the content and learned something new about the exciting world of cryptocurrency. Be sure to subscribe to our channel and hit the notification bell to stay up to date on the latest news, trends, and insights in the world of crypto. See you in the next video.